Hey guys, so today was a really bearish day and I will make a quick trade breakdown. So as always, we start on the daily chart. As you can see right here, we are still trading within yesterday's candle. So basically that's an inside day. Therefore, these days are to be like treated with more cautious. So definitely a more difficult day. But if you have like these huge wicks on the daily chart, we want to see price trade basically to the levels or to the quadrants of the daily wick. So because we basically also like scrap the buy side liquidity right here, we are looking for lower prices, especially because we still have like the huge imbalances which got not basically equally delivered yet. So they are still inefficient and not balanced. So now drop to the 50-minute chart. As you can see right here, really bearish day. We were consolidating a lot. We had equal Asia lows. We had a new high time frame gap. We had the London highs right here, and we traded higher with New York open kill zone within our New York open kill zone window, and then basically topped with the 8:30 opening, and then just traded lower from there. And also right here you can see the daily upper quadrant of the daily bearish wick, so yesterday's daily wick, and reacted off it, traded higher, and now we are really selling off once again. So that is right here definitely a market maker sell model, and we are probably targeting the lows right here. But before we drop on the 1 minute chart, I want to show you regular trading hours. That's always really important for my trading approach. So right here we have regular trading hours. So what's important? Basically, right here we have yesterday's new opening range gap, and that's basically some days before. But because we are still trading within the region, it's kind of interesting to me how we react there to it. So how we react to the level. And right here, basically we have the huge bullish new opening range gap from today, so 204 handles. That's really bullish. So therefore we are actually in trading conditions on regular trading hours. Therefore we actually want to see price trade back to the upper quadrant at least, and then follow actually the trend higher and eventually take out the buy side liquidity which formed with the opening. But we did not. We only traded higher right here, and then as you can see, we are selling off now. So I want to show you ES. So ES is actually kind of similar. With like the similar situation. The basically the balanced price range right here, it's a bit higher. So on NQ it's not basically equal, not equal with the consolidation right here as well. So I can show you once again. Right here you can see on NQ it's way lower. So the consolidation on NQ is for the today is right here above the balanced price range, and on yes it's basically within the same price region. So right here. So basically on yes we as well scrapped every session sales liquidity and are also like now trading lower. So there's not really a huge SMT within our day. So therefore we will basically come back to NQ. So let's drop to the 1 minute chart. So for me, within the opening right here and within also like our 10 AM macro, there wasn't really anything I would like to take, because we are really trading lower. We are really bearish. I'm aware of this, of the fact that we are bearish. But to take any trades in here for me is like chasing price lower. So especially because we scrapped with the Asia session every session liquidity, and therefore I don't want to chase anything lower. And as you can see right here, we also like had really huge wicks to the upsides and to the downside, so really high resistance conditions. And now you could basically look for a market maker buy model, but it's really a bit it is difficult to trade, especially because you have to be aware of like lower time frame SMT, to be really align with the right move higher. So for example, right here we have actually kind of a setup which looks takeable, so or tradable. We basically scrapped the lows right here. We traded to the upper quadrant of the daily wick and traded higher with displacement, broke above the high. But we once again just broke down, manipulated lower because it's just one down close candle. So therefore that's really huge manipulation. But yeah, so therefore this level or the setup right here is really dangerous. We can look on ES. So for example, we could not really trade anything higher in here. So it looks really messy on ES. So therefore you have to be aware that the setup on NQ is still not in play because it's just not clean enough on ES. And once we basically scrap the liquidity right here with the down close candle, it actually looks way cleaner. So therefore this is like the right move to chase, and don't try any longs in here. So once again on NQ, you just have to be aware of the fact that there will definitely be any kind of manipulation and also like high resistance. And I think what I learned today is that you could look for a market maker Bible retracement if there was any kind of like recognizable manipulation. Therefore the inversion failure gap right here would have been a really nice entry actually, and then just targeting the higher time frame gaps right here, maybe with the buy sell liquidity right here. So that would have been actually a quite nice trade. So but yeah, still it's kind of, you never really know if NQ will trade higher, because we also like could just consolidate, take out maybe the high right here and then just trade lower. So bit difficult. And then with the London close macro right here, we had SMT, and I was thinking, okay, because we still had like the buy sell liquidity right here, and now I want to take a look on regular trading hours once again. So basically what our situation was, we had our London close macro right here, and as you can see, we were really respecting the upper quadrant of today's new opening range gap. So therefore I expected, okay, we traded lower, maybe we traded just into the balanced price range right here, and now we are trading higher, respecting the upper quadrant. Therefore we can trade higher and take out the buy sell liquidity right here, because that's definitely a good draw for price, because actually there's no price action in here. We just with the opening traded lower, so therefore that's a really nice liquidity pool. But we just wicked above the high right here and then traded lower. So we are not bullish. We are actually still in a bearish market maker sell model. So not only on the higher time frame, as you can see right here, because we basically consolidated, traded higher, swept basically the buy sell liquidity right here, and now are trading lower, targeting still external sell liquidity. But also like on the lower time frame, we can see that we are in a market maker sell model. So right here we basically have a market maker buy model, but it's only a retracement. So therefore we have to expect that we will only sweep internal liquidity, not external. Therefore to anticipate higher prices in here is wrong, because you have to expect that we won't trade even up here. So basically with the sweep of the high right here, we are now sweeping external liquidity if we regard basically the move to the upside right here. So basically now we form a market maker sell model within a market maker sell model. So now I want to show you my executions. As I said, I was trying to look for longs in here within a London close macro. That's actually quite not even that bad, because we have like the bullish SMT. Therefore this could have been a short-term run on stops, and then we are trading higher. But regarding like the higher time frame direction, and also like the fact that we are not within a market maker buy model which will target external liquidity, that's just the wrong approach. But it's not that big of a deal, because I also like had a really tight stop, and small loss, but then I regarded, or I was aware of the fact that we are definitely within a market maker sell model, because we swept like the external liquidity of this price move to the upside. So we are now, and we could not close above it. So only with the wick, we swept definitely liquidity right here, and then just traded lower. And after we basically traded below consequent encroachment of the breaker, I entered short. We traded once more higher into the inversion of the gap, and then just traded beautifully lower. And I took a really nice first partial right here. And also I wanted to see basically us to NQ, or I wanted NQ to see trade, no, I wanted to see NQ to trade lower, so that's the right way. But we were like having trouble, so therefore I took just another partial, and I think that's actually quite a good partial as well, because it's like of within the bottom of the inversion of the gap right here. So there's definitely support coming into the market, and was aiming for external liquidity, as I said before, but we actually traded quietly like to the wick right here, and then just exploded to the upside, and I got stopped right here. I'm content with the stop, because this price to the upside is really aggressive, really deep manipulation. We don't want to have like our stop with, so we have to be break even at least in here. So therefore this to get stopped is reasonable, and it's just part of the game, I would say. But we traded lower, scrapped the extra liquidity right here, and still traded even lower. So basically smart money was not allowing anyone to be part of the move right here, in here. So really nice delivery. What I was also like mentioning, or not mentioning, but regarding, was basically the 5-minute wick right here, because that's definitely a inefficiency which has to get traded at least to consequent encroachment, and only if we trade to consequent encroachment, the inefficiency right here is efficient, so balanced. And so always the consequent encroachment level is a nice target, but also because we are not expecting a retracement, but a basically expansion to the downside, because it is a market maker sell model within a higher time frame market maker sell model, we are expecting NQ to reach external liquidity. Therefore it is like more important for trading retracements. But I think that's basically it. So not easy trading day, especially regarding regular trading hours, because it was just not really. We're trading basically against the regular trading hours direction. But I think sometimes, especially in that case, it is like we have to like regard the bigger picture with electronic trading hours. But here it's definitely clear to see that we are in a bearish market. So especially with the daily chart, I think that's like the most important one right here. So and sometimes you just have to trade against the regular trading hours direction or the higher time frame direction. But I think sometimes, or basically most of the times, the higher time frame direction is like the more important one. But to be aligned with both of them is like the perfect approach to me. So that's basically the setups we want to trade, to be basically aligned with both directions, and also like find a really quality condition setup on the lower time frame, and then we can definitely find nice trading setups. But I'm content with today's trading day, and see you soon.